Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody had a great holiday. Had a good Christmas. Hey, George, how you doing? So let's get right into it, everybody. So I was with you on Friday. Mentioned that we probably still had some volatility, even though market obviously is volume is light. So we had a gap. We came in long the NASDAQ, long from 1080, 8075. We had a gap higher last night. If you were watching the Globex session last night, so we actually gapped higher and rallied until about the London session. So what happened? What happened to the rally? Well, you can blame the bond market. So if you take a look at what the bond market did, the bond market started selling off around the same time, and so rising interest rates. And by the way, the bond market sold off because of China. Believe it or not, China is lifted their COVID policy and whatever, and so the bond market is rallying because it anticipates more economic growth and inflation, and that's really where that come from. So kind of a cycle. And right now, with a thin market, a lot of the algorithms are really kind of active, as you can see. And I've been talking to you guys about this. So in a nutshell, if we go back to the S&P, let's take a look at the S&P chart. Really haven't, we stalled right at 3,900. If you take a look, right? So hey, JT. So the S&P stalled right at 3,900 after the gap yesterday, and then bonds came in, got hit, and where we end the day is in no man's land. We have the low from last week at 37.88. We peaked at 3,900 last night. We're sitting right in the middle. Yep. Well, we basically sold off, JT, and then rallied back up again, and it essentially just went back and forth. It was kind of a choppy trading session today, right? The biggest move came from last night. If you did a volatility breakout, which is what I'm doing with my members, right? Remember that one we talked about? Yep. So yeah. By the way, I'm going to be doing a class tomorrow at 4:00 Pacific. So if you guys want to sign up for that, still not obviously not too late for that. I've already got like 50 signed up already. So go ahead and hit the link below and sign up for that class tomorrow. I'm going to be talking about hedging. I'm going to actually do a bunch of things. I'm going to talk about why I think we're going to have a tough first quarter. I'm going to go through the whole thing and then give you guys kind of a primer on hedging and kind of preview the volatility breakouts that I just talked about, JT. So I'm going to do a little bit of that as well. And so we'll see what happens there. So all in all, I think, bonds really are the culprit today. Looked pretty good last night. If you were watching, again, the Globex. In fact, we were up almost 600 on our NASDAQ position. And then, obviously gave most of it back. We have a free trade on most of my members actually got out with $400, $500, $600 worth of profit. I always tell people, if you're comfortable taking the money, take it. I'm still in it, in full disclosure, I'm still in it. Again, entry on that is for me was 10, 80, 80, 75. So, kind of hanging in there. We'll see if I can hang on to this overnight. It's going to be a little bit challenging here. The NASDAQ is clearly, again, the higher interest rates are really having a little bit of a challenge here. Hang on a second. There, that's much better. Okay. So clearly the NASDAQ still underperforming. If we break below this 1088, 1080, 8075, 1070, 98 level. I think there's a good shot, and I think it's probably it's almost probably a given that we probably go and break the lows. But that, I'm not sure if that's going to happen this week, or maybe they hang in there this week. But at some point I think in the first quarter of next, 2023, I think we're going to probably break down. I'm actually very, very negative for Q1 of 2023. And again, in the class tomorrow, I'll outline all of the different factors, charts, and everything. By the way, there's various factors. The chart obviously doesn't look great. The chart, especially the price action today kind of confirms that. So that's kind of where we're at. Going forward for the next 3 trading days, one thing I will tell you that we have the housing starts number tomorrow, right? So housing starts could be that last little bit of economic data that could move the markets around. And then again, tonight, depending on what happens with China, what caused the bond sell-off last night was China. I don't know if China is going to have an impact again, but we'll see. But all in all, just very choppy trading. We haven't really made any significant headway in the equities. Stronger market today was still the Dow. The Dow, if it can break above 33,673, I think rallies back up to 34,390. Now, under the hood, I want to talk about that. XLE, the energy stocks did the best today, right? And we are still long calls in the XLE. We already covered our puts right at the lows. We still have the calls. And so we've already made money. Even if the calls went out worthless, we already made money on that situation. But if the XLE rallies above 90, then we're going to be back in business on those, and we still have about 8 trading days. Well, actually, let's see, 7 full trading days on that. On those, they expire a week from this Friday. So that's another thing. So if you look at the XLE, that looks like it's ready to break out. So energy stocks still doing best. Technology doing the worst. Apple breaking down. Again, I mentioned Apple. Apple in the low 20s could be Apple and Tesla. As you guys know, Apple and Tesla are going to be very critical, and I think that's also a problem for the Nasdaq. Clearly, right? So looks like Tesla may be heading down 100, Apple down into the 120s. So we'll have to see what happens there. And if that's the case, that kind of confirms our bearishness in the Nasdaq futures as well. Okay, so we'll see. I'm not sure if that's going to happen again by the end of this week. If the seasonals actually kick in, or we just fall apart here. It's going to be interesting in the next couple of days. But all in all, just a choppy trading session. And whether this is just going to be the pattern now for the rest of the week is going to be interesting. But I do see, as you can see, if you position yourself correctly, I still think you can have some volatility, especially if we come in overnight. Okay. And then again, talking about the bond market. So we did take a long in the 2-year, and we stopped out with a very small loss. I only took one contract. I think our loss was $138. So that was actually pretty reasonable. We tried to get long. I think I mentioned the other day 102.22, so you can see that went through that, and looks like there's nothing on the charts now on the 2-year until you get down into the 101.5 area. The 10-year and the 5-year. So the 5-year's got a level that looks somewhat interesting. Around the 107.28, the 5-year. Okay, so you can see a lot of volatility in the bond market. So today's action was really If you, I don't know, JT, do you trade bonds at all? Because you can see this is what I'm talking about. There's still a bunch of volatility in the bond market. So if you want to maybe take the rest of the week and see what you could do, the bonds are actually look at the charts of the bonds. Again, you got to be able to rotate between the different markets, right? Which is what we do at TTS. We can't just get fixated on one market, and a lot of that, the 30-year is still pretty expensive, right? So the 30-year is probably, all the levels, even if you go down to the 15-minute or whatever, still $500-$600 wide. But if you come down into the short, uh, shorter end of the yield curve, the 2-year, the 5-year, that 5-year looks pretty decent to me right here. So take a look if you are so interested in the 5-year and the 2-year. 10-year, I don't see anything on the 10-year until we get down to about 112. But the 5-year's got a really interesting level coming up here. Yep. Yeah, and again, we had some really nice action in the bond market. So if you're looking for something to do for the rest of the week, I think the bonds are really going to be where it's at. And then on the equities, I still believe that there's going to be something happening here. They're very choppy right now, but I think if bonds calm down, if they can calm down, I don't know, maybe they won't. So here's the thing: if bonds continue lower, then I think S&P goes all the way down to 3,800 and probably in short order. I'm talking probably the next couple of days. So I think it's all going to be predicated on the bond market. Okay, so check that out. I wouldn't give, I wouldn't. I mean, obviously, if you got other stuff to do for the rest of the week, if you can put in a couple, hours in the day. And by the way, the thing, I get this excuse all the time, and I'm going to address this in tomorrow's class, is I don't have time. Well, here's the thing. If you take an hour and do the analysis and do a set and forget type strategy, how much, how long does it take you to put the trade in and then just let it play out, right? Now, again, if you're active and you're trading momentum and even our volatility breakout trades that I put out, they're basically set and forget. They're when the volatility when a breakout occurs, it's gonna get you filled on one side and it's gonna go or it's not. Pretty simple, right? You don't need to sit there and watch it. Again, I encourage people, especially coming into the new year, is changing your mindset, your mentality. I find still people have been doing this for 3-4 years, kind of just spinning your wheels. What I'm trying to really convey to people is to change the mindset from a kind of trading not to lose versus trading to win, right? You understand the difference between trading not to lose. In other words, you exert every bit of effort in not losing, whereas you should just take losing in stride, and then that's going to change your mindset so that you can actually trade to win rather than not to lose. There's a big difference in that. Does that make sense, everybody? I'm going to talk about that tomorrow's class as well, right? This whole notion, this I call it trader mindset, winning mindset versus a losing mindset. Most traders come in trying to avoid losses at all costs instead of winning. And that's not right. Well, not just that, JT. It's your attitude. It's your mindset, right? So anyways, okay. All right. Dollar, not a whole bunch going on there, really coiled up. And again, remember the two currencies I've been talking about? Yen and peso. Those are the only two currencies that you should be looking at right at the moment, right? So remember, the peso had a big rally. I'm still looking at shorting the peso. That had a nice pop. It pulled back hard. And the yen also the yen is something I've been looking at as well. That finally broke down. Looks like it's headed down to in the 75 level that I've been talking about. Uh, so the yen, by the way, two setups for the yen. One would be to have it come down hard. The other one is if it falls off here. Now, if you look at the chart of the yen, it's been kind of meandering lower, right? You can see it kind of just been, look at it like a 5-minute chart or whatever. You can clearly see it's just kind of been meandering. Once it falls out and creates a distribution zone, like a drop-based drop or something, then you can actually hit that. But right now, after that big surge with their policy change in their the JGB, the Japanese government bonds, it's just been kind of drifting along lower, but it's probably ready for a big move here coming up. Okay. And then, as you guys know, I'm still somewhat bullish on, and we're trying to get long actually gold right now and silver. Haven't really had anything. It's just kind of been chopping around. So we're going to be patient with that. Probably will not get that until the end of till next year, till volume starts coming back in again. Also, before I forget, TLT, we're also trying to buy TLT in the high 90s. I think I'd mentioned we were trying to get short. We missed that one. Now we're trying to get long. As the economy really starts slowing down in the first quarter, second quarter of next year, bonds will probably rally again. Rates will come back down again. So that's the premise there. In the energies, oil, again, 80, 81, been all over the place. Again, China driving lots of it. There's not a lot going on. It's kind of forming a little bit of a range between 79 and 81 at the moment. And we'll see. I'm not expecting, unless, again, I'm not expecting a whole lot out of oil at the moment. So we'll see what happens there. And then nat gas, rolled over. So if you're trading nat gas futures, you should be in the February contract. We had a little bit of a gap. It tried to bounce off that gap, 511. If you look at it from last night, we had a little bit of a gap action there. And then, really not a lot going on. We do have inventories, by the way, on both nat gas and oil on Thursday. So we'll see if that actually creates some volatility in both those markets. Lastly, I think I mentioned the grain markets. We had a big gap in the wheat market. In the soybeans, because of remember that usually when you have the grain markets closing for an extended period of time, which they did over the weekend, right? Because remember, they closed on Friday. They didn't open usual, on Sundays they open at 8 Eastern. They didn't open till this morning at 9:30 Eastern. And so if you look at the chart of the soybeans, they had a gap up, huge rally, and then gave it all back, and it's sitting right at the gap. So it's going to be interesting if it holds that gap here at 1490 on the soybeans. That's another market that I think can get some volatility this week, believe it or not. Look at the move on that thing. There wasn't anything on the charts per se that got you to short soybeans. It just kind of fell, but it's going to be interesting. I think I've mentioned this $15 mark. We'll see if this holds. If it breaks down, then I think there's going to be some great shorting opportunities. And then wheat also, wheat finally broke out above the 772 area, and pulled back. And I'm looking for some kind of a pullback. Maybe won't happen until after New Year's. It did actually pull back to 769, but it's been very, very choppy. You should be trading on this guy. You should be trading the Let's see, what contract is that? Yep. Yeah, yeah. Again, you should start looking at the grain markets because they haven't really been moving, and even corn. You notice corn got a big jump last couple of days, last couple of weeks, right? It went from like 653 all the way up to 674. So that's something I'm really starting to look at now. Again, it's sitting right at a resistance area at 675 corn, which is the breakout where it broke down from. So it's the old support, a new resistance kind of thing. And we're right at that cusp right here at 675. You look at your charts on the corn, that looks like it may be ready for a move. So there could be some really nice, maybe even this week. So to sum it up, you've got the grains, you've got the bonds. I still believe the equities are going to have some movement, and possibly even oil, right, with China and so forth. So I still believe there's some good opportunities coming up, even as we close out the year and so forth. Okay. Any questions, comments? So again, let me just finish up here, everybody. Again, I got the class tomorrow. Again, if you want to attend, it is free. So that's tomorrow, Wednesday, 4 Pacific, 7 Eastern. I'm doing it. I know there's a lot of people. You guys are kind of hanging out at home, whatever. So if you want to take advantage of that, I already have I think 40 or 50 signed up. Yep. I use Thinkorswim, PB for options and stocks, and I have another platform that I use with Iron Bank for my futures trading. So I have a separate platform for futures, PBJ. Yep. But all the charting I do is on Thinkorswim. Yep. Okay. Also, again, if you want to join, I actually have a couple people on board right now. Join me for 5 free days. That's just for the morning sessions. You want to go ahead and. If you want to get into the class, hit the link below, or let me actually put this in here. Yeah, hit the link below and just tell them you want to sign up for the class, or go to the website, or go to support@transparenttrading-solutions.com. What's your name? Yeah, Rob. Okay, so support. Do you maybe to type it, or just can you write it down? Support@Transparent Trading Solutions. Yeah, go ahead and get and send an email to support@tradingacademy.com. Trading Academy. Yeah, right. At Transparent. No, forget that. Freudian slip there, right, everybody? Wow. Support@transparenttrading-solutions.com. Wow. Yeah, man. That's it. That's funny, right? Freudian slip there. Yep. Yep. So here. Right? Oh man. At transparenttrading-solutions.com. If also, if not, just go to the website as well. Rob, here I'm typing it in for you. Either way, you guys know where to find me, or PM me on the on Twitter as well. Either way, okay. So there you go. Okay, it's actually Transparent Trading Solutions. So make sure you also get that right. Trading Solutions with an S at the end there. Okay. Yeah, make sure you get that S in there, or else it won't get to us. Okay. Yeah, trading solutions. Yeah, it's in the video below. Yeah. So just hit the link below. That's easy. But I'm trying to help you out here. Okay. All right, everybody. Have a great rest of your week. If I don't see you, have a happy new year. I will be here on Friday to wrap things up. Okay. And again, I'll see some of you guys tomorrow in the class. I'm looking forward to it, actually. Okay. So if not, I'll see you in the class tomorrow. Okay. Take care, everybody. Have a great rest of your day. Yep. Okay, Steve. Thanks for that. Appreciate it.